Welcome to Mutilating News, the oil bomb on America. Canada's shocking move. The U.S. faces an oil crisis. Canada has just issued an unprecedented warning of potential halt on oil exports to the U.S. This move could cripple the American energy sector, spike gas prices, and send shockwaves through global markets. But what's really driving this looming trade war between two of the world's closest allies? In this deep dive, we'll break down 7 critical factors that led to this crisis and what it means for America's energy security, the economy, and the future of oil and gas. Factors behind Canada's oil export threat. For years, Canada has been one of the biggest oil suppliers to the U.S., providing nearly 4 million barrels per day. But recent U.S. tariffs and policies aimed at penalizing foreign oil have put Canadian crude in the crosshairs. Key takeaways: the U.S. has increased tariffs on Canadian oil, making it less competitive in American markets. Canada relies heavily on U.S. refineries, but retaliatory measures may change that. With tensions rising, Canada is considering an extreme countermeasure, a complete halt of crude oil exports to the U.S. What could happen? U.S. oil imports from Canada would drop by nearly 50%, creating an instant supply shock. Refineries in the Midwest and Gulf Coast, which depend on Canadian crude, could be forced to slow production or shut down. Gasoline and diesel shortages could hit the U.S. hard. This would be the most dramatic energy retaliation in modern history. If Canada follows through, Americans could see gas prices skyrocket overnight. What it means for drivers: prices at the pump could jump by $1 to $3 per gallon within weeks. Truckers and shipping companies would face massive fuel cost increases, raising the price of consumer goods. Inflation could surge again, impacting everything from groceries to transportation. Even electric vehicle drivers won't be immune. Rising electricity prices could make charging more expensive. Why U.S. oil can't fix this mess? 358. Many assume the U.S. can just ramp up domestic oil production to replace lost Canadian imports, but it's not that simple. Why U.S. oil won't be enough? Many U.S. oil fields produce light crude, while refineries need heavier Canadian crude. The Keystone XL pipeline was cancelled, limiting new Canadian oil flows into the U.S. Domestic production is already near peak levels. Expansion would take years. A Canadian oil cutoff would be felt almost immediately, with no quick fix in sight. The shrinking U.S. Strategic Petroleum Reserve in past energy crises. The U.S. has relied on its Strategic Petroleum Reserve (SPR) to stabilize prices. But there's a problem: the reserve is at its lowest level in 40 years. President Biden's 2022 emergency oil release drained over 250 million barrels, leaving the reserve dangerously low. Refilling it would take years, and at current oil prices, it would cost billions. Any further withdrawals would weaken U.S. energy security, making the country vulnerable to foreign supply shocks. If Canada cuts off oil, America's backup plan is already in crisis mode. The global energy ripple effect: a U.S.-Canada oil trade war wouldn't just hurt North America, it would send shockwaves across the world. Global consequences: OPEC Plus may exploit the crisis by raising oil prices, further straining global supply. European and Asian markets could face higher crude prices as U.S. demand shifts elsewhere. China and India could benefit, securing more discounted oil from Russia and the Middle East. This could reshape global energy trade, shifting power away from North America. Key political implications: the political and economic fallout beyond gas prices. EU-US-Canada oil dispute could wreak havoc on political and economic relations. The U.S. may be forced to rethink its energy policies, reopening discussions on pipelines like Keystone XL. Investors may panic, leading to stock market fluctuations, particularly in the energy sector. This isn't just an oil issue, it's an economic and political crisis in the making. The road ahead: what's next? As tensions mount, several critical decisions will determine the outcome. 1. Will Canada follow through on its oil cutoff threat? 2. Will the U.S. reverse tariffs or negotiate a compromise? 3. Will global markets react with panic or stability? 4. Can alternative energy sources fill the gap in time? One thing is certain: this energy standoff could change the global oil industry forever. Final thoughts: what does this mean for you? Whether you're a driver, investor, or energy enthusiast, this potential crisis will affect you in some way. What do you think? Will Canada really cut off oil to the U.S.? Will America retaliate? Drop your thoughts in the comments below. Subscribe for more deep dive analyses on the biggest energy and trade stories shaping our world.